Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. Got another busy earnings show. Obviously, we had Amazon, we had Google, we had Snapchat yesterday. We are going to talk about those. We're also going to talk about a big buyer overnight in Apple that caught Dennis's eye. He was tweeting about it last night in case you didn't see what he was tweeting about between the hours of 6 and 8 p.m. So we're going to talk about Apple and their trading action. We have a lot to get to. There's like a bajillion other earnings, so we'll try to cover as many as we can. Plus, our guest today is Todd Gordon. He's a CNBC contributor and the founder of Trading Analysis. He'll join the show at 8:35. Joel, what's the word in the overnight markets?
Oh, we're in the red here, Spencer. Big fall overnight here. I'll give you the low. The low is 26.46. Wednesday's low is 52.25. So there's your area you got to hold. If not, I see a low at 26.21, and then we may be saying hello to 2600. But first things first, taking out that pre-market low. Coming back on the upside, it's important we clear 26.64, this mid-range on the session. Crude down 76 cents at 66.57. Big support down at 66. Gold getting a boost up 5 at 1237.40. Silver up 4 cents at 1467. But hey, we want to bring in Dennis real quick. He was keeping an eye on the after hours action in Apple. Dennis, what did you see out there?
I don't know if you can bring up the trades from last night, but we're starting with Apple, and you're like, why are we starting with Apple's when Amazon's down 150 points? Because somebody decided that they had to own Apple last night. And I'm not sure if this was forced buying at a potential margin call or something like that, but Apple, the buyer just would not stop. So you have, and I'll just lay out the scenario. Obviously, Amazon are down 150 points. You've got the Qs are a wreck. Every tech stock is getting destroyed. Apple's down about $3.50, and if you can bring up the tape, maybe even $4. It's trading like the 215, 216 handle, where it should trade. And then just slowly starts crawling up around maybe 630, starts to crawl up, gets all the way up to 218, and they flashed huge bids at 218, like on two different exchanges for 200,000 shares apiece. So like shows 400,000 to buy at 218. I was like, what's this all about? Then it cancels. And the thing just falls because there was people who were obviously looking at that big bid and buying it up too. And then it falls. And I was like, well, was this layering or was it anything like that? But then the buyer comes back. So it wasn't. It was real. And not only did they come back, they came back like in algorithmic form, and it just started lifting offers. And it would back off. And then it would start lifting offers again. And then it would back off and the stock would come in. And then it would start lifting offers again. And I'm telling you, it must have bought at least 500,000 shares. And if you show this action from last night, that isn't showing it, but you can see it from last night there. You can see the lift. For between like 7 o'clock and probably 8 o'clock, it probably bought 500,000 shares up, and it was bought all the way up to like 220.70. So like up $1 on the day. On a day, Amazon's down 150 points. Somebody's buying Apple up $1 after hours. So I did short into it. I was starting to throw up in my mouth because I started shorting like 218.5 when it started getting ridiculous. Shorted more like 219.5. And then I'm like, oh, I don't even know what to do now. It won't stop buying. So like I'm hedged out, I'm arbed out, but I'm like, man, this arb is not working. So anyways, once it came back in later on, I did cover a little bit, obviously too soon. I shouldn't have covered any of it because it's come all the way back down now this morning. But I mean, it was incredible. And if you just add that up, if they bought 500,000 shares up like 219 to 220 times 4, you're talking about somebody throwing away $2 million last night. So why? There's no way for us to know why. So all we can do is speculate on reasoning behind it. Maybe somebody that just absolutely wanted to own Apple and didn't care what the market was doing. That's pretty dumb because they could have bought a lot cheaper here, obviously this morning and probably today. But it could have also been like forced buying. Maybe there was like some type of margin call or something. It would be weird to see a margin call after hours. It would also be weird to see, buying an Apple. But I was just laying out the scenario like maybe some hedge fund blew up or something. Like maybe they were short Apple, long Amazon and size or something, and they needed to, go in. But it almost looked like the algorithm was so aggressive that it almost looked like forced buying. So I think it was like algorithm gone haywire, or with some type of margin call or something. But I Spencer was saying it earlier, rare to see a margin call down after hours like that. Usually they do before the market closes, but I don't know. It was just so weird to see Apple getting bought so aggressively on such on a night that everything was destroyed.
All right, and let's just make.
And then just one other theory.
Sure.
Somebody was saying, Apple was doing a buyback maybe last night. Maybe it was a company buying back the stock, and that would be weird as hell. And if they're doing that and I own Apple shares, I hope they're not going after hours and doing buybacks, because that's just a waste of money. And you can see that right now. Whoever bought that stock, though, it's down at 215 right now. If you say maybe they averaged in around 219 to 220 for $500,000, they threw away $2 million. $2 million gone. Poof.
Do you think it was more? I mean, just one person? I mean,
yeah, you could tell by the way the tape was. It kind of reminded me like a small version of the night debacle that day when the selling just wouldn't stop. The buying in Apple just would not stop last time. I mean, that night algo was really aggressive. It was trading like every few seconds, but this, was very aggressive as well. It would back off for a little bit though, and then it would come back in, and then it would back off, and the stock would come in, and then it would fly up again. So, and the reason why you could just tell from the tape, first of all, there's probably not two people in the world who are doing that poor of decision making to buy Apple up $5 on a day that Amazon's down 150 points. Secondly, you could just tell by the way the action was, it was the same algorithm, just keeps coming back. That's just tape reading. It was easy to tell. And they flashed size at 218. So obviously they backed off their size and then just went full algorithmic for them. And it looked like they wanted to buy like 300,000 or 400,000 shares at 218. I think they bought them and they paid up for them all the way up to 220.5. Crazy.
Yeah, and it just we've talked about the S&P 500, how, the components of it. Well, Apple is the top component in the index. I think the weighting is up to almost 3.5 or 4% in the entire 500 stocks. So you don't have to be a rocket scientist to see the spools just going down. We lost 40 handles immediately from the 4 o'clock close. I know the 4:15 close reflects a number under cash, but I also like to see that 4 a.m. close. So if anything, just simple, common sense would rule, on something like that.
Unless it was forced buying and they couldn't stop,
but if there was some
type of margin call. Yeah, you see that on a bat, like you'll see that sometimes on like a buy-in on a bat when you can't get a locate. But you can always get a locate on Apple. If it was some small stock, I would say, that's a buy-in happening, where somebody obviously, is getting bought in on stock. And, that's a vomit fest too. That's when you're shorting something that is very thin and all of a sudden, it becomes hard to borrow and the broker can't locate it for you. They will literally go into your account and buy it in. It kind of resembled that, but there's no way you couldn't get a locate on Apple. So that's why that theory is out the window. So it looked almost like a margin call type of thing happening there, but typically that will happen before the market closes. I've never seen it after hours. It was very obvious though that it was some buyer that was just super aggressive. So maybe they just decided that, they had to own the stock, they wanted to own the stock, and they got it. Paid up about $2 million too high though.
Okay. All right. We'll see what happens here. Trading down $4 here at 215.80. It's down 1.8%. So it's even down more than the S&Ps, which are down 1.26%. Dennis, what do you want to do here? We got a lot of earnings to go on.
Let's go to Amazon. It's the disaster. It's the reason that the market is giving back its entire gain from yesterday. Can I just say, this market, it has, Doug Cass always says this, the market, with no memory from day to day. This is no memory from day to day. Look at the last 4 trading days. Down pretty big. Rally all the way back. I think this was Friday. Then down hard 2 days ago. Then rally a lot of it all the way back yesterday. Now down again. The fade trade is working to a charm. If you are coming in here and just fading every whipsaw move, like you get a stock, you get the market going up 500 points, sell them short. You get the market coming down 500 points, buy it. That is working right now. I don't know if that continues to work, but the last 4 or 5 trading days, the fade trade is on and it is hot.
Yeah, and the volatility here, is something that, in order for the market to, regain its footing, and I'm not saying whether, we can make a specific low on one day. It's impossible to tell, but what you need is the volatility to come in. You need buyers to step up at one specific point or an area and make it. So there's a lot of things here, pointing to more downside here. It's it's hard to pick bottoms in this market. It's even harder to pick tops with the volatility here. But down goes Fang, right? All the people that talked about these big cap stocks and whatever, dominating the market. If they ever fell from their roost, this is what's gonna happen in the market here. So
yeah,
Spencer, I mean, and I'm the only one here. How come I'm the only one here on Wall Street talking about a recession, right? I mean, everyone's worried about higher interest rates. I'm worried about a recession because you look at you look at your autos and you look at your housing. So I really rising interest rates in a possibly slowing economy. Now we're getting a GDP here at 8:30, so that's going to get some big movement off that. So we'll see what kind of action, see if we get a little bump off that. But let's go over the Amazon numbers.
All right, and the numbers were eye-popping, which just goes to show you how ridiculously high the expectations are for Amazon here. So the EPS was not comparable, 575 versus 314 estimate. So that's looks like a huge beat, but just not comparable to the estimate there. Revenue missed a little bit, 56.6 versus 57.1 billion dollars. AWS revenue, which is like their key segment right now, 6.68 for $6.71 billion. So a miss on the AWS number, a miss on the revenue number, and a guide lower than expected Q4 sales guidance, 66 to 72 billion dollars versus a $73 billion estimate. So a slight miss on Q4 sales guidance, on Q3 sales, and on Q3 AWS sales.
I mean, this is unbelievable, the moves the last 3 days. So you had the stock trading. Let's just go back to what would be the 23rd. So Thursday's action. Is that third? Am I losing track of days? When was the 23rd? No, sorry. That's Monday's action? Monday or Tuesday?
Let's see here.
Yeah, that's Tuesday's action. So Tuesday, you were trading around 17. You closed at 1768. Wednesday, you lost 100 points all the way down to 1656. Yesterday, you rallied 130 points all the way up to 1794. Today, you're losing 150 points all the way down to 1630. It's 100 point down, 100 point up, 150 points down here again. This is absolutely incredible trading action. 10% moves here overnight in Amazon. I don't know, or 8% moves here overnight for the last few days. Unbelievable, the volatility.
I'll give you the pre-market low. It's a potential target, 1518.74 or 1583.74. Sorry about that. We've got a nice little bounce back up here into the 1630 area. Spencer, just pull up a monthly on this one because, where are you going to figure a retracement from? Where are you going to figure support from? When the stock ended the year, last year at 1169.47. I mean, there's just a lot of air under here. Use the pre-market low and don't use like daily lows. Try and use some monthly lows for perspective. And the monthly low under the 1583, I see a monthly low at 1546. So call 1550 the next possible area of support in Amazon. On the upside, since we made that low, your highest, let's call 1640 is your highest level. It's actually 1638.01. So 1638 is your short-term resistance here.
I mean, look at that chart you're showing right now, though, and maybe cut in a little bit closer and just show it for like the last 3 years even. Just look at or the last 2 years, because we're looking at the all-time, and you can see, the rocket ship, that it has been in the last 20 years, which is incredible. But this thing has still been in rocket ship mode even in the last 2 years. So if you can zoom in, you'll see what I'm looking. You see, whoa, what this Amazon is so cheap here. It was $2,000 just a few weeks ago here. Now we're talking at $16.29. But when you really look at it on this run up in 2018, this stock in October was 1,000. So really, year over year, you're still up 60%. There's a ton of people still sitting on a lot of money in Amazon. So does it have to bottom here? Absolutely not. There's all kinds of room. This is, a coin flip here. Could it come all the way back? Yeah, it could do anything. I mean, this market doesn't have any memory day to day, headline driven. It can do anything. But this is, concerning here because the trend, this trend that we've had going for the last year and a half, or, you didn't say at least the last year and a half, is starting to look broken. So that might mean, again, it's better to sell the rips than buy the dips. And if you've been selling the rips, you've been making money. The last few days you've been buying the dips, you've been making money too. But a bad earnings report here, the stocks continued to leak. I don't think this is going to be one that rips right back higher here because now you're on fundamental news, not just trading off the market. So I think rips to be sold in Amazon.
I mean, and it was what they beat on the EPS, but they missed on the revenues. So, there you go. That just focus on the revenue number.
Well, EPS wasn't comparable.
Okay.
Yeah. So it looks like
they all just care about top line. And that's what we've talked about in this market. Spinners talked about this market cares about top line growth. Didn't grow. Problems. That's why you're seeing the thing down 8%. They want to see top line growth there, and seeing it, trouble. Let's go to the Google numbers. It's down 70 points as well. I mean, it's just market carnage everywhere here. I own Google in my long-term investment portfolio. Still sticking with it. I'm averaging from like $200, so I'm probably going nowhere. And I sold half of it, so I'm actually playing with the house's money forever now. Google numbers.
13.06 was the Q3 EPS versus a $10.46 estimate. So a nice $3 beat on the Q3 EPS. Sales 33.7 versus $34 billion. So a slight miss on the Q3 sales print, which we just talked about as being very important. And those are the headline numbers.
I mean, stocks down 670 points here in the pre-market. I'd say $1,000 on the Google. Let's look at the Google. They've kind of come in. They're not that. Remember, they used to be like 30-point spread between the two. It's like 7-point spread, so they've come in here now. But Google, whichever one you want to trade, I think you got support at 1,000 just because it's big psychological level. I know that's 45 points below here, but I don't see much before that.
Let's see here. This is a little bit interesting here. Your initial spike took you down to 10-12, and then you came down to that area a few times just earlier this morning, 10-15. So 10-12, 10-15, another $20 away. Call that potential support. Also the psychological $1,000 level, 1,006.29. That was a low that you had in May of 2018. And then below that, you're looking at 990. I mean, half and whole numbers here. If you really,
that's it. Yeah, that's all you can use really. I mean, when you're in wild markets, use the big whole numbers.
And you know what's also,
not talking 1044 on Google. $1,000. They bottomed there multiple times, just below it, cut through it. It's come this far. Why not test 1,000 and hit some stops below 1,000? That's why I think it's going there.
Yeah, and also in these markets,
not today maybe, but I think it's going there eventually.
And also, Dennis, one thing also with the people in these markets, it's like if you don't want to use targets and stops, you should definitely have areas in mind, because like a stock like Google, it could blow through 1,000, and 1,000 was your target, and you're thinking, oh man, I'm going to get this at like 950. It could go down to 987, and then in the blink of an eye, be back up at 1010 or 1020. So stick with your targets. And if you don't like putting physical stops in the market, at least have a mental stop where you're going to execute, because the market, can do a lot of things. So it's always good to have a game plan. Like my dad used to say, a change plan is better than no plan at all. So, just keep that in mind when you're trading today. All right. We had some other reports as well.
Intel, let's go there.
All right, pull it up in my Pro. Intel reporting last night a Q3 EPS of $1.40 versus $1.15 estimate, so a nice beat there. Sales 19.2 versus $18.1 billion. So nice Q3, again raising their fiscal year EPS guidance was raised from $4.15 on the low end to $4.53 on the low end of the range. So a nice EPS raise there for the fiscal year. Sales guidance for the fiscal year also raised $69.5 to $71.2 billion. The Q4 guidance they gave was higher for the EPS and for the sales. So guidance higher across the board in EPS and sales beats for Q3.
Great report, and you can say, oh, pretty good day for Intel. It's not trading the red when everything else is. This actually is a disaster there too, because this thing went up to over $47 last night and gave it all back. So, I mean, you look at that and you think, that doesn't sound too good now when you're saying this was over 47 last night, trading with some volume up there too. So everybody really liked it, but the market just was too heavy for it and it could not hold on. I still own this in my long-term portfolio. Wish I didn't. Probably if it went up to 47, I'd probably get out. But, I don't think we're going to get that shot here today. But this goes to show you, man, sell the rip works again.
Closed week on the set. Well, closed off the low. So one potential. Keep an eye on the close. You're only 47 cents away from that. That was 44.31. And then we'll just keep it real basic. Yesterday's low, 43.28. And then the recent low of the move that was made on Wednesday here at 42.36. Coming back on the upside here. What was yesterday's high? Maybe use that as a potential. 44.94. Hey, we're actually trading right up at yesterday's high. Your 3-day high was 45.09. So if you're, if you want this for momentum, get above 45 and hold it, and perhaps we'll get a chance to test the pre-market high.
We can go anywhere now. Again, let's just do this theme here of selling the rip, because Chipotle ripped higher on their earnings last night too. Give us the numbers. We'll break down that after hours action, but it's already moved back to the red.
The Q3 adjusted EPS, $2.16 versus a $2 estimate, so a 16-cent beat there. Sales 1.2 versus 1.23 billion, so a slight sales miss for Q3. What else do they say? They say comps for the fiscal year will be in the low to mid single-digit range. And that's just about it. So EPS beat, a sales slight miss, and comps in the low to mid single digits.
I mean, this stock, I saw 244 print. I don't know where, or sorry, I'm going to handleitis here like you, Joel, sometimes 444 print. How high did it get?
Oh, is that the Fed? They want to know where they should buy space
today.
It's
alarms. Stuff going on.
CMG got a huge spike up.
They get a 460.
Yeah, it did. It got actually.
Sell the rip, guys. If you're long, and you know what? If you have options and call options, use that after hours action. We've talked about that all the time. Stuff just can't hold gains. This is what a bear market is all about. You had an excellent Netflix report. It couldn't hold the gain. It was gone in 5 days. Some of these things are going in 5 minutes. So Intel and CMG couldn't hold for much more than 5 minutes. This is a bear market. This is what it's all about. And it may not be in the official definition of a bear market because we're only down 6%, but this is trading like a bear market. When you get a rip up in a stock and it gives it back right away on a good report, it's just telling you there's so much overhead supply and everything. People are getting crushed and they're looking to raise money wherever they can. They get a pop in something like CMG. They're like, thank you, I'm getting out. It can't hold the gains. 460, it things up, literally, like you're talking about 25-point gain. You're talking about a stock up 6% on good numbers, and it goes right back down. I mean, this is the definition of a bear market.
Okay, 461.64 was your pre-market high. You've come all the way back down here, almost flat on the session. 425 even, up 112. Yesterday's low, 413.17, and then the actual recent low of the move, 411.55. So call 412 potential support here as you have a double bottom there.
Can we do Snapchat? Because
sure.
I just thought this is funny. This is like the same exact story as Twitter. So Twitter yesterday or 2 days ago, whatever, we saw their best quarter in terms of profitability, but still flat or slowing on the user growth. And that's the same exact story here today with Snapchat. They had their best quarter in terms of revenue and profitability, but flat user growth. So Q3 adjusted EPS, 12-cent loss versus a 14-cent loss estimate. Sales, best quarter, $298 million versus a $283 million estimate. But DAUs, daily active users, were down 1% on a quarter-over-quarter basis. So it's like you win some, you lose some, and flat users, we want to see those user base grow, and the profitability is great, the revenues is higher, but users aren't growing.
Well, I've been saying the stock's eventually going to $5. I'm sticking with that price target here. I think I started saying that when the stock was 11 or 12. I wish I would have been shorted all the way down, but wasn't the case there. Lucky I wasn't long, because I was long this at one time and it cut through that 12 support, and I was like, no, thank you. Should have shorted it that day. Would have taken hardly any heat and been up huge 2 months later. Again, stock rips on the numbers originally. Anybody that, is in this thing is saying, oh, it's up 50 cents all of a sudden, I got some of my money back, get me out. Or if you bought in the last week and a half, you're saying I got all my money back, get me out. They're using the rips to sell. It's the same story again and again and again here. Stocks rip up on a decent report or okay report, and then they sell off. And, you can say, okay, well, the numbers aren't any good or whatever, but they were going to sell no matter what. This is just a dog. This is a stock that is not only a victim of the current market, this is a stock that's a victim of its own management. And I think this is going lower yet.
Okay.
I'm a seller of all rallies.
Yeah, this one. I saw
that's
this.
My opinion.
I was working at home when I saw this pop up and up 50 cents. I was just thinking, what is Dennis doing in this one after hours? And then it just
I saw it and I was just so busy trading everything else. I honestly saw it at 750 and I was like, I should short that. And then I got sidetracked because there's there's like 25 other things to trade at that time. Amazon going down 150 points. There was so many things to trade. I looked back at it like an hour later and it was like 620. So I'm like, oh, guess that was a good short.
Okay. And
it's hard to short when they're going straight up though. I mean, that's a hard trade. Like that's, takes a lot of guts to short when they're going straight up like that. And, it was the same thing with me with Apple last night when I started to short into that. I was like, I don't even know what to do here. I mean, it kept going up on me. It didn't make any sense that it was going up. And obviously I would have been rewarded had I just completely ignored. But, I did cover some because I just got too uncomfortable. So obviously I said I shorted at like 218 to 1850 and 1950 and went up to like 2080 and it came back in a little bit. Actually, I was even covering before that because I didn't know when the algorithm
GDP, Dennis, GDP. Do you want to hop
Okay.
on?
Yeah, I do want to trade this. So, okay. I'll pick you up in a couple minutes.
I mean, I don't even if it really matters what the estimates are on this or we're just probably going to get some good action. Spencer, do you have anything?
I don't even have the estimates up. That's how little I've been paying attention to GDP. I can pull it up here in my Pro real quickly, but I was not even watching between the general volatility and just the two busiest days of earnings. I don't even know if this number will matter today.
I guess.
But the GDP estimate is 3.3%. Prior reading was 4.2%. Let's see what comes out right about now. What was it, Brent? 3.5. There we go. 3.5%. I mentioned the 3.3% estimate, so a 0.2% higher. And anything happening, Joel?
We are getting a little bit of lift here, I guess, for people like me that are talking recession or instead of higher interest rates. You want to see a good number here. That's what the street is perceiving here. I mean, you're going up. You're not. There's sellers out there. I mean, you're ripping up, you're moving up good, but we do have some buyers here in the market. We are approaching mid-range on the session. You guys know how I like to talk about mid-range, and mid-range comes in at 20. Where's our mid-range here? I suppose. Hold on one second. Mid-range comes in at 2663, and we had just blown through that here. So the doomsday scenario is not playing out this morning. So far, you've cleared mid-range on the session. Let me see whatever number. All right, 2678. That was your open. Your pre-market highs 2680.75 here. So here, GDP helping us out here this morning. I'm trying to see stocks moving here. And what's moving up here? Apple is still within $1 of its low, moving up a little bit. Microsoft, that's still down. I mean, stuff is still in the red, but still is the spoos. How are the banks reacting to this? Because if this is the whole scenario was, higher interest rates are good for banks, but that certainly hasn't played out. Bank America, not moving much off this. If Bank America, I see a level here in the lower 26s. The last three lows, 2608, 2611, 2618. So those are your potential area of support. But I just think the market here overall, just, giving a little sigh of relief here that they just didn't slam it off the number. I think one other thing that you have to keep in mind is when you have a 4 o'clock cash close like you did at 27.06 and a quarter, and then in 15 minutes we dropped 20 handles to 26.85. You have a lot of things that are trading far under cash. So that, coming into the discount, you can buy stocks if you can get them cheap enough to, sell the futures of it. So we did go off at a huge discount, and within the first, few minutes of the open, the fair value between the futures and the stocks will need to be resolved here. So we will keep an eye. But for right now, the SPOOs are attempting to rebound here, just hanging out in mid-session here, 26.63. Actually, 20, can't even really quote it because it's moving so fast. But that's my soft number right here, 26.63 mid-range on the session.
Whipping around. SPY actually, interesting enough, went 40 cents wide before that number came out. So that would have been 4 handles wide on the E-mini. I bet, and that's algorithmic. So the E-minis probably did they really go 4 handles wide on that? We went 40 cents wide in the pre-market on SPY right before that number. So I don't know if E-mini did that, but the SPY went 40 cents wide. I was like, wow, they really went wide. And it's usually a 2-cent market. So they were obviously being very cautious market makers on that number. We got the left. Banks spiked a little bit there, but we're already leaking it. So they got a little spike there, and now they're starting to leak it again. So I don't know what to say. This market is finicky, obviously, and wild.
Well, usually right on those numbers, usually there's pretty good liquidity. I didn't have the montage up, but a lot of times they just pull their bids and offers, and there's like, 20, 30, 40 cents. So they don't want to get picked up on that.
You have to.
Yeah.
Market maker got to back off on that stuff. I mean, you haven't had to, because we haven't had the kind of volatility that we're getting now. But when you get a number like that, volatility coming in, you got to back off if you're a market maker, because you don't want to get picked off by another high frequency trader and obviously grabbing you. And obviously it's high frequency traders on the market. It's high frequency traders versus high frequency traders, but you don't want to get picked off. So they all back off.
Okay. Intel stock on our med jumped over 45. So Intel, one of the few stocks here in the green, clearing, attempting to clear yesterday's high. I mean, you look at it on the chart there, and it, 45 was resistance the last 2 days. So that's an important level. SPOOs lose mid-range on the session here. We are almost back to where we started from right before the number, I think. Let me check to see.
We're up above 5 points.
Yeah. Okay. All right.
It's 8:35. Let's take a quick break and grab our guest for the day, Todd Gordon. He's a CNBC contributor. He's also the founder of TradingAnalysis.com. He's a technical analyst. We'll be right back in a moment with Todd. All right, welcome back, everyone, to Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick, now joined by our guest, who I'm bringing up on the screen right now, Todd Gordon, CNBC contributor, TradingAnalysis.com. Todd, how's it going this morning?
Good. How you guys doing? Happy Friday.
It's always a good day when it's Friday. Always a better day, but fun market we've had the last couple of weeks, yeah?
Yeah, man. I can't believe these weeks are going so fast with the volatility. This is good. Good GDP print this morning. We'll see if it kind of cools things down, but feels good to be a trader again, huh, guys?
Joel, I think you're on mute. I think
Wow.
Joel was trying to talk there. Hi,
I was
Todd.
gonna
How you
say,
doing?
wow.
I'll take over
I didn't
because
think
Joel's
that
on
was
mute.
that
He had the old
stupid.
mute trick.
I didn't think that was that
Hello?
stupid of a comment. I was like, well, maybe I should.
Joel didn't know
No,
what
no,
to say.
we're good,
Joel's
we're good.
lost
Testing.
over here right now. So Todd,
Fast
what do you-
market
so-
over here,
well, how
Todd.
do you handle? Yeah, he's in a fast market over there. I'm the one that's in the fast market. How do you approach markets like this? Because we've been in this market, where we've kind of, been in this bull market really for 7 years, but
Right.
really relentlessly higher in the last year or two, where it seems like every time you buy a dip, you're rewarded for doing that. All of a sudden, that's not working. How, as a trader who's maybe newer to the markets, not experienced, this kind of sell-off, how do you adjust your trading?
I mean, Dennis, like you're a prop trader, you're a real trader. You've seen probably 4 or 5, like 3 or 4 really solid pockets of volatility. And like everything as a trader, just like specifics of the markets aside, tactics are going to change. And those of you who are technically trading, and Joel, I mean, you're going to be right there too. Do you guys notice that when volatility and realized ranges expand, the charts and the timeframes that you look at decrease? So if you traditionally trade a 60, 120 daily chart in a low VIX 2016 and 17 environment, all of a sudden you're going to be down on like a 15 or a 5-minute chart because the realized range is so big. My only thing just to start that off is don't fight it. Know what your risk is on a trade. Define your plan. I mean, cheesy motto of my company is plan your trade, trade your plan. Like you've got to go in, especially in volatile markets, know how much you're risking on a particular trade and realize what chart time frame will accompany that risk that you have to take in whatever market you're trading. So that's just the first thing I would say.
Hey,
What about just looking? Well, we'll break down the technicals here and let's go to like a stock like Amazon here, because this one is almost impossible to trade here. It seems like right now.
Dude, I'm gonna have
you're up 100, you're down 100. You're up 100, now you're down 150. It's the yo-yo chart there. Last 4 days there, Todd.
I'm gonna have a new hole in my body this morning. I put some upside call butterflies on for earnings. I like the technical pattern on the downside. It was responding well. I feel like the overall market was bottoming. I started to move in a little bit and just didn't get outright long the market, but kind of shorted volatility via butterflies. It's just kind of a wimpy way to be long. So yeah, Amazon, man, I'm an Elliott wave guy to get the context, whether we're in a trend or correction. I saw a good 5-wave decline on the daily down on Amazon, started to respond. So I was like, all right, let's go to work. So I put a defined risk options trade on. I'm going to get slapped around a little bit this morning. So I don't know, man. I just think options with such a high price volatility, you got to define your risk. So I don't know. I mean, unless you're in front of the screens all day like you are, Dennis and Joel. I mean, you guys, managing the positions, but definitely define your risk in these escalated volatility environments.
You know how I'm trading Amazon the last 3 days?
Yeah,
I'm doing the SOH trade, the sit on hands trade, because I don't even want to get down and dirty on this, because I don't even know how to control the risk when you're just trading the flat out equity here. I mean, it's 1645 and then boom, it's 1655 in your face. So it's so wild. It's almost, I trade usually a little more boring, and this is the opposite of boring right now.
Yeah, there's nothing wrong with that. Cash is certainly a position. I mean, just looking at the uptrend that's in place since how far back? Must be way back. We're going 15. I mean, that trend doesn't come until 1550. So if these lows don't hold, I mean, we could have another $100 to go on the downside. Is Amazon enough to sink this market right now? I don't know. I have some Intel. I had an Intel position on as well. Let's see if that guy can hold up pretty well. I had Tesla. I've been trading some earnings in here. Again, define risk option positions, just keeping it nimble. I have been trying to, like I said, I don't think the bottom is falling out of this market. I think 2,600, 2,650 in the S&P is a zone that I'm interested in. I've begun buying again with option positions. I have a feeling today is not going to be a flush out. I just feel like I don't think Amazon's going to crush this market. I feel like we're going to try to make a go into the close. And shorts at least will begin to cover. If not, new money comes to the market. I could be wrong. I feel like we finished positive today.
Todd, you mentioned, sometimes going to shorter time frames of volatile markets. What about also kind of taking like a longer term perspective on things? Like if you look at a long-term chart of like Amazon here, and you're just coming in and you're just going to buy the dip here. I mean, don't you think you have to be cognizant of like, there's people sitting on profits from 2015 when that stock was at $285. And, you know, so they really don't care if you're coming in for a scalp or a day trade or something.
Sure.
You know, how do you, you know, like for a retracement or for a longer term perspective, you know, what besides, you know, using the shorter time frames, how do you go out farther in time to, you know, use your parameters?
Yeah, you're saying how do you adjust the guy who's sitting on nice profits? He's got a 5-banger in Amazon. What do you do with that? Do you scale out? Do you try to generate some income? Is that what you're saying?
Yep.
You know, I think that you use this high volatility. I mean, we might make a new VIX high today. 28, I think, was the old VIX high from the initial push down on the 11th. Yeah, so I would say use that higher volatility to possibly bring in some income, sell some calls. You know, you've got to decide where that call level may be. If those investors are holding stock position, the elevated volatility makes those calls richer. So you can get more premium, decreasing the cost. So I don't think, like I said, the top is in. I love volatility just like you guys do. Man, you can make so much more money short-term trading. So I don't think the top's in. I think it's in a bit time to either scoop some, sell some calls. Like I put some longer term Boeing positions on. That chart looks great. I mean, finally just starting to break out of a long-term base. Apple, nobody told Apple that we're in a tech correction here. I mean, you can't get Apple below 219. I even look at some of the energy names. Exxon is one. I'm looking at my portfolio screen here. There's a shopping list that I have that I am going to put to work here. I've got cash that I'm sitting on. I've been waiting for an opportunity like this. I think we're going to start seeing that here pretty soon. I hope I'm wrong because I love trading the volatility. But to your point, if the bottom does not fall out, this is an opportunity to scoop some of these names.
Todd, I'm going to take my trading hat off here for a second. I'm going to put on my investing hat here because I've been sitting as an investor, and you know, I've a trading account, I have an investing account. The investing account, I try to just buy stocks and not look at it. It seems to work okay. I'm a lot better trader than I am an investor. I'll say that much. But I've been sitting on some cash, and I raised some cash. You know, there was signs that we were going to start to sell off, and I even raised more cash in the last couple of weeks. But now I'm looking, and I'm like, should I start putting that? You know, I was even talking to my wife. Should we start putting a little bit of this cash to work? And in what areas should we be putting that cash to work if we're looking at it from like a time horizon of outwards of above 5 to 10 years?
I mean, to your point, I'm just with you. I mean, do I have a beautiful, long-term, eloquent, fundamental thesis of what sectors can outperform? No. I just like, if you're going out and applying the same principles that we used on the shorter term to make your trading months, why not just use those longer term? I mean, I think relative strength is such an important thing. I'm looking at healthcare, I think doing pretty well. Some industrials, I think, have held in pretty well. I mean, how do you just turn your back on FANG? So what? So they overestimated what earnings are going to be next year. Cost of capital is going up. Okay. So, all right. So we're getting a pullback here. I just say stick to what you know in the longer term. There's some sectors that I think look good. I do think, this bond breakdown, this bond uptrend, I should say, break up in yields, down in prices, that's been in play for 38 years, 38 of 39 of my years living this earth. That is real. So I think we do need to adjust to a higher interest rate environment. Is that ultimately going to sink the stock market? I don't know. I sure hope we can adjust to it and get back to an increasing interest rate environment. It's been 5 decades since we've seen that. So financials, possibly, anything to do that's interest rate sensitive. I'm not sure. I don't have the long-term fundamental outlook of what's going to outperform. I don't know. I'd love to know your thoughts, though.
I don't know my thoughts, as I was asking you. It's a tricky market to invest in. So, yeah. Joel, what are your thoughts here long term? Are you putting some money to work in the long term investment portfolio?
Yes, I am.
What'd you buy? What do you
like? It's kind of the sin portfolio here. That stupid stock LQSIF, that Elconin.
Joel's into the pot stocks.
They're selling it in Canada. I dip my toe in the water. And then the other stock that you and we've been talking a lot about the wagering and the gambling. And, you mentioned the stock to me, TSG, the Poker Stars group. So, I mean, I've just been adding to the sin portfolio here. I think with the markets going down, people are just going to be, they're going to be wagering more. I think sports betting is taking off, the legalization of it. So I think TSG is a way to capitalize on that. And just, the other just the old boring stuff, some of these higher dividend paying stocks have been eyeballing AT&T since $33, but you've been keeping me out of that. So really not deviating from the same investment plan that I've had from the last 15, 20, 25, 30 years, not going after these high flyers, staying the broad funds that I owned are like the higher paying dividend funds in the S&Ps here. So, I mean, why jump off something you've been following for years just because the market has wild gyrations? So that's what I've been doing. I
hope you're asking for forgiveness. Why fade human nature, right?
Yeah. Yeah. But you're adding to your position though, Todd. You're adding to your position in life, right? Man. Todd was kind enough to come on today. What are you expecting? Your third? Is it your third child? Fourth child?
Yeah, our third.
Life.
Of course, like I'm joking with my wife. Of course, like the due date is today, and this is our third. We're expecting a baby girl. We got twin boys. We're 4 who are. I love them dearly, but they're insane. They're volatile like this market. So I'm joking with my wife, like the baby, she doesn't want to come out. Like she doesn't want to be born at the cusp of a new bear market. So she wants to see if the spoos hold here.
Nice.
Then she's like, all right, and then I could come in. She doesn't want to like top tick the market. So yeah, it's crazy. It's good. Everything's good. Life's good. I'm super appreciative. We're in Jersey now. This is a temporary office at her in-laws. We just bought a house in Saratoga. You guys all have an open ticket. I have a feeling Joel's going to be my guest room a few times for Travers.
Yeah, I'm good. I just like the last 2 years we've had things fall on that, but I got it marked on the calendar. Never
honestly,
been to Saratoga.
Come. You like, especially hotel rooms are insane in Saratoga during Travers. You've got it. Like if you want to come, it's all yours.
Okay.
Todd, before we let you go, I want to real quick get your thoughts on Facebook and Apple heading into to earnings here next week. Do you have any technical thoughts there?
Facebook, it's like, what is going on with this 150 level? It's like in the last week and a half, 2 weeks, it's withstood this 150 so well. And I find it interesting. It's not showing any upside yet. I find it very interesting. I think Facebook is obviously, everyone's over Facebook, but Instagram on the other side is really booming up. So I think that looks good. I think the social media stocks in general are starting to show signs of life. I'm long Twitter. I've got this crazy, and I'll circle back to Apple and I'll stop rambling on here. I've got this kind of bear call ladder in Apple. I can give you the exact strikes in Twitter, I should say. I'll give you the strikes if you want. It's basically a play that if Twitter gets above 40 by the end of the year, I'm thinking, we get paid maybe a buyout. I don't know. Maybe you guys think I'm crazy, but I just think Twitter acts so well down here. And if it starts to come back, I don't know, maybe we'll get a little bit of an M&A deal in Twitter. So I've got that play on. The chances of that happening, nothing. SOCL, the social media ETF, it looks very similar to Twitter and Facebook, starting to hold lows. I think that's constructive for tech. And as I said, Apple, I'm long Apple. I have upside unbalanced butterflies on Apple, which is bullish. It shows great relative strength in here. I know there's a lot of questionable things about Apple and in the news cycle, but the stock continues to act really well. And it's something I'm trading shorter term, and I want to hold longer term as well.
It's held up really well, Apple. I hold it in my long-term investment portfolio there too, but unbelievable resilience here really from 260. I mean, you're talking about a stock that's 2 or 3%, I guess 4% off the highs. When you're seeing Amazon and, the rest of FANG, not that, it's always had a little bit lower beta, but I mean, off significantly from the highs. So I like that relative strength in Apple too.
Yeah, that's for sure. I don't know. It's fun, man. Like you said, volatility is. Can I put something back on you as a prop trader, Dennis? Something that I was taught way back is as a prop trader every day. Guys say they want to make money every month, and I know you guys have this long-standing joke that you make money every month trading, which is awesome. But in volatile periods, do you find that you make like 70 or 80% of your annual P&L?
Yeah, we
that
do.
20, 30% of the time.
Yeah, we do, because most of us prop guys, and me especially, I'm trying to take advantage of little market pricing inefficiencies, and inefficiencies obviously increase substantially when you get more volatility. So I've said this on the show multiple times. My P&L is very correlated to the VIX. I'm like like a small little Virtu Financial, obviously not doing a lot of the strategy they're doing now on the high frequency side, but they're doing a lot of stata or different stuff. So as volatility increases, it's always good for me. So I used to say, when the VIX is at 10, I'm paying the bills. When the VIX is at 30, I got a big smile on my face because I'm usually making 2 to 3 times as much as I'm normally making.
I actually did that same study. I used to trade for a fund, and we overlaid P&L on VIX, and there was a correlation.
For sure.
So, absolutely. And let me just say one more thing before you guys boot me off. Like, to the investor at home, I mean, I go on CNBC and I bring up the technicals, and I get just absolutely woodshedded on Twitter. Technicals are garbage. It's like, I just want to make a point. Like, listen, fundamentals, technical analysis is nothing more than looking at the hard red edge of the chart, the last agreed upon buy sell price. Anybody who's got any capital, as you guys full well know, is acting based on a fundamental thesis, not of what data that happened in last quarter, but what's going to happen in the future. Markets get very emotional when that is mispriced, when people have incorrectly calculated what future earnings are going to be. So it's people trying to discount what's going to happen in the future. So it's mass psychology driven by emotion. Those price patterns are very important to try to figure out where people are positioned. So fundamentals are important, yes, but as an investor, have an idea what the trends are, what the charts are. They're so very important. Don't discount them. Don't be one of those guys and say technicals are voodoo. That's ridiculous, because all you're doing is looking at the scorecard of the fundamental investors who have real money to move this market around. And that's something you want to look at.
It gives you a quick idea of what the stock's done. I mean, even like the first thing I often do is, especially if I haven't heard of the stock for whatever reason, I'm going to bring up like a 90-day. Is the stock in an uptrend or a downtrend?
Sure.
These are the first question I ask myself. So the chart's going to tell me that. And then I know, okay, well, then you can start analyzing from there. People are caught in this trade? Are there people, is there no pain ahead? Is this at all-time highs? And it can just have go up with relative ease. I mean, that's all taken from the charts. So charts are still very important. I've always used a lot of different indicators, not only just charts, but I mean, the charts are something, that when I haven't heard of a stock, the first thing I look at is the chart.
Absolutely. Yeah. Picture's worth 1,000 words there.
All right. Todd Gordon has been on with us. He is a CNBC contributor, also the founder of tradinganalysis.com. Todd, as always, great job. And
Thanks.
Good luck today or the weekend or whenever the moment comes. Hope it goes well. Have a good one.
Thanks, guys. Take care. Have a good weekend.
Thanks, Todd.
All right. Where are we at in the SPY right now?
Stabilizing here. We're still
down.
We're
trying.
Yeah. 26.65. We're down 23 handles here. So, stabilizing over mid-range on the session here. Just not seeing a lot of taking in the spoos are moving around pretty good, but
it's hard.
Yeah.
Because they're all wide. It's pre-market. There's no imbalances to look at. I mean, they're all relatively small. GE, and we're going to talk about this in a second, has a 419,000 share silent balance. That is of note. GE absolutely killed yesterday. And now you start thinking about the September lows. I mean, a lot of people got on board, and I think we got this one right because we were kind of calling it the hope trade. And it turned out that it was only a hope trade. And a month later, it's given back all those gains, from obviously the change of management. But I mean, I think we're going to test the September lows of 1120. Can it hold there? That's the key. But we got a special guest going to come on 9 o'clock, and they're going to break down not the technicals, but the fundamentals. Joel, tell us about this.
We're having John Inch from Gordon Haskett. He was formerly at Deutsche Bank. He was the one that, we kept on talking about and saying, man, he made that call. I think the stock was like around $30. And I kept on saying, when we get the opportunity to get this guy on the show, we are going to get him on the show. He is have been just spot on. So he put out some reports today. We'll talk about what he's looking for in the next earnings report, and that's coming up just at 9 o'clock here. So
yeah, John was the first major analyst to put a sell rating on GE. This was back in May of 2017, and so if you've been listening to our show at all since pretty much May 2017, you've heard us mention his name before, because he was really the first guy to go on a limb, put a sell rating on the stock, and he was right. So we'll see what he says this time around. And
so Before we get to him, we got 4 minutes here, and I'll just quickly go through some other imbalances for you. Alibaba, 158,000 to sell. What a yo-yo ride this one is too. I mean, it's tried. It hasn't made new lows on the move. That's the good news. The bad news is we're only 4 points away from it, so very well could test it here overnight. China, with a nice rally a few days ago, is pretty much giving it all back again. Sell the rip just continues to work in this environment. Twitter, which had a hell of a day yesterday, nice breakout over 30. Coming in here a little bit this morning, you know what? Keep an eye on this one. If this thing can get down the lower 30s, I think you'll find buyers because this was, the breakout, and that's the point of, where it broke out from. So I think if you can get down to that 30 area again, I think you will find buyers. So I would love to see Twitter come in another $1 to give me a shot to actually just try it from a swing trade long. Not that I'm trying a lot of swing trade longs, but I'm interested in this one. AMD got the beats yesterday, did bounce back up over 20, getting the beats again. Watch it for a double bottom here today, 1772. So that was the low. I don't know if you're going to get that low, but, funny things happen. It's a very volatile market. It's very whipsaw. But, sometimes when we get back to the point where the low of the previous day, sometimes it'll find support there again. So I would kind of like AMD if it got into the 17 handle. Again, leaning on that low, though. So if it took out the low of the move, I don't want to own it. So I'm looking at a few trades here, potential longs here. But again, just because the fade trade's been working, so it seems like when we're down 300, 400, 500 Dow points, it seems like if you're a trader and you're buying, it seems like you're being rewarded for at least one day. And if you're up 400 or 500 points, then it's the opposite. So I'm more inclined, and I can't talk, I'm getting all choked up. I'm more inclined to sell the rip than buy the dip, but I think I might try to cautiously buy some dips today.
Yeah, and just pointing out here, Intel showing some green on the screen here, up $1.12. Yeah, you cleared those pair of highs at 45. I think also on days like this, I mean it's certain like maybe we have the specific news on it, but other stocks that have already gotten beat up that maybe haven't, participated in the market. Maybe you'll see, some rotation into some of these safer stocks. I think I read Ford has a 7% dividend now. That had its best day in 7 years yesterday, but ran into a brick wall at $9 yesterday. Can you see what's up there at $9, Dennis?
No, it's probably just littered the book. So let's go look in the book here. I mean, Ford is just people on the pain trade. I might dump the rest of my Ford here. Actually, I have in the long-term investment portfolio, but no. You know what? It's not that. So did we go over 9 yesterday? Because it looks like it got cleared out. Did we get over 9?
It traded.
We kissed 9, so we cleared out some of it probably. I only see 65,000 shares, which is nothing for Ford. And then you just to put it in perspective, 905, 40,000, 906, 40,000, 908, 78,000, 912, 100,000. You just keep going up and it just gets really thick. Then 180,000, 921. I mean, there's 100,000s all over the place here once you get above 9. So it thickens up. It definitely looks a little bit open to 9, and then it gets thick.
Okay. Let's see what else we got.
Well, it's 8:59.
8:59.
So yeah.
Okay.
So let's, Dennis. I don't know if you want to hang.
I'm going to hop off. I'll let
right.
you guys do this interview, but I'm going to be listening to this because this is the man. The man.
All right. So we'll be back.
Top GE.
Yep. We'll be back in a moment with John Inge, analyst at Gordon Haskett. Welcome back, everyone. We are now joined by John Inge from Gordon Haskett. John, how's it going today?
I'm fine, thanks. Thanks for having me.
All right, John, on our show, we talk about, a lot of stocks, and we talk about GE, and we also talk about analysts, and we love to follow, the trends, and we like to see the analysts that get out ahead of things in a stock and make, particular calls. And so I always said, when we get an opportunity to get John Inch here on the show, to talk about GE, that I was going to take advantage of that opportunity here. So just real quick, GE has an upcoming earnings release. They delayed it. And man, oh man, that kind of makes people, I think, a little bit nervous to begin with here. So just tell us what you're looking for. What will be important things in the upcoming earnings report for GE?
Well, first, people should be concerned. GE also fired its CEO, John Flannery, after only 4 months on the job, and after approving his plan to basically downsize the company, sell off healthcare, Baker Hughes, and other assets to pay off tremendous debt. That plan was enacted fully by the board in June, and now the lead board director is the new CEO, who has just delayed the earnings release, as you stated. So the earnings release by itself is obviously not going to be great. The company announced it was going to write down really an unprecedented amount of goodwill for its power business. The problems with GE start with power. They don't end there, but power is clearly not good. They are losing substantial share. They leverage aggressive accounting on the power side to pad their numbers, and there's just a number of challenges. But I don't think the actual earnings number is going to be as important as what the new CEO describes with respect to their situation regarding their debt, the liabilities, the cash flow. Those are going to be the probably more important things than whatever they report on this, adjusted EPS line.
Okay. So if you had to point out two things that would make you turn you a little bit positive on the company, what would that be? I mean, what could you hear on this call that would say, or you just, the proof is in the pudding and you're going to wait, for, not jump to conclusions from one earnings call or one earnings statement here. What are you looking forward to, to turn this company around?
No, it's a good question. GE is a long-term workout, in my opinion. This is going to take a very long time to turn this company around and get it, moving in the right direction. What you're seeing now is basically the result of years of mismanagement and excess, and just the company moving in the wrong direction. And so the earnings release by itself, remember, we have a new CEO. He just started. These aren't even really his earnings. It's going to take him a while to, go through the company and come up with a plan. But I think if there would be to the point, there are two things that I would be looking for. The first would be, what does he say about the decision to divest healthcare? Because I think it's telling. It suggests that GE really does need money because of all of the debt and other liabilities that they've built up over the years. If the CEO, Larry Culp, were to say, look, I've looked at the plan and to divest healthcare, and even though I approved it, we've decided to retain healthcare now, I think that could, be something of a positive inflection, insofar as maybe their liquidity issues aren't as pressing. I think they are pressing over time. They just may not be as pressing in the short run. So that could be one consideration. The second thing you really have to focus on is the cash flow. Again, the earnings are not going to be, the company has aggressive accounting. There's lots of different levers they can pull. I think it's all about the cash flow as far as I'm concerned. The cash is not good. And the latest cash guidance for $6 billion was already cut once, and now they suspended the guidance on the cash flow. So presumably it's not good. It depends. Do they even generate enough cash to pay their $4 billion dividend?
There you go,
John.
John, that's the question. That's the $65,000 question right here. Is it, are they preparing to cut the dividend? I think you probably have had more dividend increases, steady company over the years, increasing their dividend. Is this the point where, the company's just going to have to just bite the bullet here, cut the dividend or reduce the dividend? And then at that point, I think a lot of the funds that are just buying stock, they keep these dividend, ETFs and stuff. If they eliminate the dividend, they're automatically going to have to exit the stock here. You think that that's something that may be coming up at this next earnings call?
Well, and not to mention that about a third of the company's equity ownership base is actually retail investors, simply based on GE's, decades-old legacy and its positioning in lots of end markets that, affected consumers and people ultimately just accumulated the stock. Plus, it's a huge company and people were given stock over time as part of their retirement plans and so forth. Yes, I think a dividend cut is inevitable. The company does not generate enough cash flow to support its $4.2 billion dividend. Remember, the dividend was cut in half in November of 2017. So investors in GE received only 48 cents of dividend versus twice that amount in 2017. We think the dividend is probably going to get cut in half again. Now, it's tricky because if you cut it too far, which they probably need to do to preserve cash to pay all their debts, if you cut it too far, you're going to alienate a third of your investor base. And as you said, you've got these ETF funds, these dividend income funds. They're just computer programs that are going to be forced to sell. So while Wall Street may say, well, everyone expects a dividend cut, that's not necessarily how the stock is going to react on the back of that. Retail investors often react kind of on a lagging basis. And as you know, these computer programs can just trigger selling points simply in response to that. Plus, we think that GE is ultimately going to have to raise equity capital. How do you cut the dividend, lower your numbers, adopt conservative accounting, and all of a sudden keep the stock price up so that you can go ask the market for $10 billion? That's going to be pretty tricky. It would be a very difficult task to accomplish for any CEO, let alone the current CEO.
Hey, John, do you have any estimate there as to when you think they'll cut their dividend?
Well, I would presume that there's going to be an announcement on when the company reports on October 30th. So next Tuesday, I would expect to hear some sort of an announcement of the dividend cut. If there isn't one, and they say they're still evaluating the situation, I don't see how much more time they need to evaluate the situation as to whether they cut the dividend or not. Now, if they can convincingly say we don't need to cut the dividend because of all the cash we generate or expected to generate, no, that's one thing. But I think the chance of that's very, very low. I mean, look, the CEO was fired after only 14 months. He was fired because things are bad, not good. And that's probably focused squarely on cash generation as well as power write-downs for previous acquisitions they've done. So, look, I would be shocked personally if the dividend was not cut. I think the question is simply how much is it going to get cut by, and what in turn is going to be the reaction. What you don't want to have to do is cut as a new CEO and have to come back and cut again. Whatever he does, he needs to do it once. Otherwise, his credibility is actually going to suffer. And, GE can't go back to the well and hire somebody else. This is it. It's this guy. He's it. That's their hope.
Wow. All right. We will have our eyes glued to the screen then on Tuesday when they report. But thanks so much for your time today, John. We really appreciate it.
Over your course. Oh, you're welcome. Thank you very much for having me.
All right. Well, that is a nice feel-good way to end the show this week. We're gonna cut our dividend. Yeah. We're gonna miss our earnings. We had
full disclosure. Well, I mean, why bother sugarcoating it, right?
Yeah.
The stock's at $11. I mean, it's completely collapsed. Yeah. It's been one of the worst performing stocks in the S&P over the past decade. And when Jeff Immelt took over, it was the largest S&P cap company, if you can believe that. Now it's been booted out of the Dow unceremoniously. Yeah. I mean, it's you think, and then people think that one guy can turn all of this around.
You're
really?
Right.
Good luck with that.
I mean, yeah.
I'm not saying he won't do a decent job and be relatively better. I'm saying the task at hand is going to require an awful lot of, just an awful lot of pretty heavy lifting, I think. And
for full disclosure, Spencer is long.
I'm like different. to say I'm long is I'm like barely like long. This was like a throwaway. This is a gamble for me. I'm not.
I'm joking.
Don't even worry about it. But anyway, thanks so much for your time today, John. Have a good weekend.
Oh, anytime, guys.
All right.
See you.
Okay. And on that note,
that was fun.
Yeah.
That was good, man. I'm really glad that we could get like a top analyst on Wall Street here on Benzinga's pre-market prep show to talk about the upcoming. And, that stock, I noticed it yesterday, at least on that rally. that thing was not going anywhere. So I think another, tip for today, folks, is, relative strength. If you got a stock, the market was just ripping yesterday. G was going down. I think there was maybe some negative comments from JP Morgan yesterday as well. So, take note of that. Also stocks that are strong in a weak market is something to take a note of. But as we end the show here at 9:11, S&Ps are just teasing here. There are mid-range on the session right here. The Bulls and Bears are battling it out here. I'm still going to keep significance on the low from Wednesday at 52.25. Our pre-market low is 46 even. So that's the buy zone here. And the sell zone here, let's see. You had your 6 p.m. open at 26.78. I'm sure a lot of people would like to see that 4:15 close of 26.85. Spencer, you want to preview the show for next week?
Looking ahead to next week, the earnings parade will continue, but we got a full slate of guests for you on the docket. We have Chris Temple, Mark Chaikin, Jeremy Schwartz from Wisdom Tree, Nick Shaheen obviously will join the show. So some good guests to look forward to on next week's shows. But if you missed any part of today's show, you can catch our podcast. We're on iTunes, SoundCloud, Stitcher, TuneIn, or Google Play, or just watch the show on youtube.com/Benzinga TV. Thanks to our guests today, Todd Gordon and John Inch from Gordon & Haskett. Really appreciate them stopping by. Thanks to all of you in our chats on YouTube and premarket.benzinga.com. Please remember that all the information from our show is for informational purposes only and not meant to be investing advice. With that said, everyone have a good weekend, and we'll see you on Monday.